So Raymond, you were on our show not too long ago on MTD TV, and now I'm meeting you here in person in Singapore. Yes. It's a great opportunity.
Yeah, thanks for having me here. It's a great pleasure to represent SDAX, where I have people in Singapore, Malaysia, and London.
So you're from Singapore, so everyone here knows you. Is this the case? Maybe tell me a little bit about yourself, and well, you don't have to tell me, but maybe tell our audience a little bit about yourself and what you do at SDAX.
Oh, well, little history of myself. I spent the last 20 years with JP Morgan in global markets. So I'm very familiar with capital markets business. Prior to that, I was actually with GE Aircraft Engines, aerospace engineer by training. How I got into this, well, it's a long story that I can tell over drinks. But right now, I'm the CEO of SDAX, and SDAX is basically an investment platform, which I'll get into a little bit more detail.
All right, well, this is actually interesting because I cover the news every day, and I've seen a few investment platforms like this rising up. This seems to be quite a trend in the market that you've got. I guess the idea is that we have fund managers up here on stage, and they get sort of first crack at the best deals. You see, oh, if I'm buying this in a REIT that the developer develops the building and they've stabilized that, then they sell that to the REIT. And I guess my understanding is that you're looking to provide a different sort of investment channel, but maybe you can tell me a little bit more about how that works. What's that mission right there?
Right. Well, as SDAX, we are a regulated platform in Singapore. We are an investment platform, and the problem statement that we are trying to solve for is getting a lot of these private markets assets to a broader base of investors. If you look at the private market space, the total real assets value in the world is 520 trillion US dollars in the world. And if you look at the public markets, it's roughly about 100 trillion US dollars. So you have multiples of private assets that's not readily available to the broader base of investors. So what we want to do in SDAX is basically be an open architecture platform, allowing fund managers, allowing a lot of the capital markets businesses to bring all types of assets to the platform and making that available to the broader base of investors, like I said. We're talking about real assets on our platform. And of course, with the latest technology of smart contracts on blockchain, we hope to automate a lot of these processes, making it a lot more accessible, cheaper, and just a lot more transparent when it comes to the information on a specific deal. That will make it a lot easier for investors to come in, find out more about the asset, and then be able to decide how much money they want to put into a single investment.
Well, I guess, I mean, in investment, it is kind of the top priority for everybody is trust. Like, how do I know that I'm not going to lose my money? How do I know how this works? So I guess some of the technology, the blockchain, helps to add some transparency to that marketplace. So it's not just, oh, they told me it would work like this, that investors can sort of see inside how these work. Is that part of the concept?
Yes, the investors will get to see every single contract. They're able to see what's in there, who the sponsors are, all the details are there. Because we're regulated, MAS is very clear in terms of the guidelines, what is made available to the investors. And of course, being regulated, the regulator wants to make sure that if anything should happen to any of these platforms, there's continuity. So there's capital reserves that we set aside to ensure there's continuity should something happen to any of the platforms in Singapore.
So, in our website a few months back, we covered the relaunch of SDAX. I guess that in terms of the branding, there's probably a lot of people here aren't quite familiar with the brand, but you've been doing deals for, is it 2 or 3 years now with SDAX? Could you tell me more about the rebranding?
Well, prior to the new rebrand of SDAX, we are actually a merger of 2 entities. One is Mintrust, that used to be a peer-to-peer lending platform, and it's been around for 5 years. And SDAX Exchange, which is an entity that was set up last year, where we received our license last year, merged together with Mintrust. I wouldn't say we've pivoted, but we've looked at our business model and looked at what has been successful. And one area that's been very successful in the last couple of years has been real estate. And that is after ARA took a stake in Mintrust. And we found the interest by the broader base of investors to be fairly rampant. Folks are very interested in real estate deals.
This is we live in Asia. I make this real estate website. The people are very interested in real estate in this part of the world, aren't they? I'm wondering a little bit. So you said you worked as a aircraft engineer, aircraft engine engineer at GE, and then you're 20 years at JP Morgan. Now you're in the world of high tech investing. Is it confusing to know what to wear when you wake up in the morning? Are you supposed to be wearing a hoodie or something? I mean, or is this maybe this banking background to help out a bit in terms of presenting these investment opportunities?
Well, I've been working for 30 years. I guess I can be considered as an old guy. When you're dealing with people's money, trust is extremely important. Coming to a meeting in a hoodie, people start thinking, is this guy trying to be different, trying to make a point or some sort of a point. But so from our perspective, ultimately we are dealing with people's money. It's extremely important. Trust is what that matters. It doesn't mean that coming in a suit is going to make a difference whether, I mean, we've seen cases in Singapore where folks have come in a suit looking great, but it's all Ponzi schemes and fraud. But from the way that we approach the investors is that at the end of the day, we need to bring something, an asset that is real asset to them. So that's the reason why we are very focused on three segments in our portfolio. We are looking at real estate, which makes up, 2/3 of the real assets in the world, about $340 trillion worth. Second is corporate financing. And third is ESG. ESG is something that, well, we've heard the panel before this. It is essential for us going forward. Look at how the environment has changed on this planet over the last couple of years. There's an area where it's a major focus for SDAX and my team. And we feel that, like the panel said earlier, either you're in ESG or your assets is going to be discounted in the future, or your cost of doing business is going to skyrocket. And as one of our strategic investors have told me, they will stop doing business with their partners who are not ESG compliant, simply because the cost of doing business due to carbon taxes is going to get too expensive.
Interesting. So there's a lot to think about, a lot to prioritize as you put all these deals together. I wanted to, in terms of priorities, when we're talking about priorities, the Singapore government has made it quite clear that they're, well, a few things. They want this to be an international financial, well, it already is an international financial hub, but they want it to be a top global financial hub. They're also pushing the tech sector, that they're very in favor of innovation. Are we seeing with the rise of SDAX and other platforms out there similar to this, is this kind of the convergence of those two trends in Singapore?
Short answer is yes. Let me just walk everybody through FinTech. If you look at FinTech 1.0, FinTech 1.0 started back in 1860s with the transatlantic cable that connected the Americas to Europe. And that's where the first Fed wire happened. 100 years later, FinTech 2.0 happened. That is when the first mainframe computer was set up with ATMs. That was 1960s. I would say, if you look at technology, there's two aspects of technology. One is the hardware, and second is the software. And software, I would consider where I came from in banking is the structuring capability. That is also technology. And FinTech 2.5 happened in 1970s when securitization happened. That allowed fractionalization, making available to a broader base of investors different types of asset classes. And then, of course, all of us know FinTech 3.0, which is cryptocurrency on blockchain. All right, that's nothing new. All of us heard about it. We've been inundated with news about it over the last 5 to 8 years. And I see ourselves in this convergence as FinTech 3.5. We're using the technology that's available through blockchain and smart contract and packaging that together with the securities that's been around for 50 years. And what we are trying to do right now, and what we are doing today, is making new structures, new securities available to their broader base of investors in a different format and with a lot more bells and whistles, which the banks will never be able to handle. And the reason why the banks don't handle it very well, simply because the booking system, the way that they put a trade on their system is, is fairly old. And to put in new functions requires a lot of technology. And in order to manage risk, the system needs to be updated. Whereas with smart contracts, we can put it on the system easily without a lot of hassle, a bit of development, but not with a lot of hassle. And to your point with the Singapore focus, I would say that the Singapore government has always been very pro-business. And if you start looking at where the Deputy Prime Minister recently have said, and also Ravi Menon, the MD of MES, have said, the focus on private markets, wealth, and as a hub in Singapore is extremely important. That is going to be the focus of Singapore going forward, on top of many other things as was discussed in the panel before this. And two areas that we will be playing in is, one is enhancing the asset classes made available to the investors, both from the fund manager's perspective in issuing new funds and new assets, making that available to investors, and investors that can come in and put their money into them. Second area would be the digitalization of their infrastructure. There's a fair bit of grant that's made available, and the government did announce that they're going to be making available another $100 million to help basically enhance this entire infrastructure.
So enhancing the assets made available to investors. So all these, we have a lot of deal makers out here in the room. So what are the typical types of assets, and what types of investments are they? Are these? I know we talked before during our data center program about how you're helping to raise money for ESR's data center fund. Is data centers one of the main asset classes? Is it more office, residential? What types of assets is it?
I would say the broad base, more on the commercial side, would be the asset classes that the investors are looking at. Residential, more in the development area where investors are looking at. But simply because the ticket size for a data center for commercial property is a lot bigger. And the intention of what we want to do at SDAX is to fractionalize, make this available to the broader base of investors like I keep referring to. Just to give you a sense, Singapore alone, M2 money, as reported by MAS for September, there is 1.2 trillion Sing dollars of M2 money sitting in bank accounts that are not, I would say, properly or appropriately deployed. That money is available. What we are doing is not cannibalizing on what's being done today by the institutions, by the managers, but what we are doing is bringing new money to the system. And I like to share this analogy. If you look at how we looked at movies in the past, a lot of things were curated and selected by movie cinemas as of what we should see based on mass appeal. And then we went on to VHS, or for those of us who are old enough, we remember our VHS tape, Betamax tape, and then CDs, DVDs, right? And we moved on to streaming. So now, with the technology that we've gone from banks to platforms in the 2000s, and now with blockchain technology, we are able to fractionalize a lot of this real estate, commercial real estate, and bigger ticket size real estate to the bigger base of investors. And surprisingly, investors are very keen on these assets.
So are these typically equity deals? Are these debt deals? Or does it depend on the sector? How does that work?
It doesn't really matter. It could be equity deal or debt deal. We've done both. We've done assets across Asia. We have done in Australia, in Melbourne, and also Gold Coast, Singapore, Seoul. We're looking at deals currently. Well, we've just launched a deal and closed a deal in the UK, in London. We're looking at deals in Japan and also in Taiwan.
So is it a situation where the SDAX prefers to be the primary source of funding for the project, or is it more often that you work with other fund managers in sort of an ancillary fashion? What's your typical model?
Well, we like to see ourselves as a catalyst. we do have investors on our platform that can invest directly on deals. However, we work with fund managers, we work with intermediaries and other institutions in terms of providing funding to these deals. Our focus, well, the spectrum of investors is so wide. So you have institutions that are speaking to us, family offices that are speaking to us in terms of putting their monies into the deal.
Okay, so that sounds like a pretty high growth sector right now. I can't go a day without reading another story about the family offices here in Singapore. One of the other news stories that I keep reading about is these cryptocurrency gurus who are, I don't know, they're fleeing Singapore to run to Dubai. They have Interpol red notices out for them and such. You guys aren't doing that, are you?
No,
this is different?
We are not into cryptocurrency. You cannot trade cryptocurrency on our platform. We are a securities platform. And I would say that the way that we think about it, we're using the technology behind it that is great in terms of what we're trying to do, bringing different types of asset classes, with bringing securities with bells and whistles to the platform. However, I feel that if you think about it, what makes gold gold? A lot of us have read in the papers, there's been a lot of debate about what makes gold gold. And I would think about it this way. In my view, is that in the next couple of years, there will be a reduction of the number of cryptocurrencies in the world. That will end up with probably you looking at 3 to 5 maximum. And once the regulators are able to get their head around it, it's just going to be another payment currency for real assets. And could that be on the SDAX platform for payment and buying real assets? I think it's a real possibility. It's a question of ensuring, there's no money laundering, your typical concerns that the regulators have. And on our platform, I mean, we do have investors coming to us and say, why don't we make securities out of crypto available on the platform so that they can also put their money in there? Just a simpler form of, I would say an asset class that's made available to them without them having to crack their head around opening the different accounts, having their MetaMask account, and also the private keys. They can have availability to it through a security.
So, I mean, we're talking about tokenizing real estate. So it's a token in terms of it's a digital security, but it's not a cryptocurrency that you're typically dealing with here. But so behind that, though, there has to be something. So I've got this token, it represents an asset. It really comes down to the contracts behind it, isn't it? Isn't that really what are the covenants backing that security?
Exactly. If you look at it, what we're doing is not very different. Well, it's not different from what we see in the security space today in finance. And all we're doing is putting this covenants, all the terms onto the smart contract and made readily available. In the past, if you're invested in some private equity investment, you need to go find your document, go through it. Now it's readily available to a broader base of investors. And should you decide to exit that investment on our platform, on the exchange, you can start putting that asset out to the market and allow price discovery. And that price discovery will then provide liquidity. And is this a very nascent stage for this industry? I say yes. Simply, if you look at crypto, it started back in 2009. It started gaining traction only 10 years later. And real assets like what we're doing on smart contract is still fairly new. And there's still a fair bit of education that's required in terms of the investors, how to think about it, how to look at the information that's available to them.
Okay, in terms of information, I noticed, I think, we discussed earlier that you have a project, a residential project in the UK coming up, and maybe that's an example we could dig into in terms of what exactly are you making available to investors and how does this work?
The UK project is actually a UK social housing fund. It's our first ESG compliant fund. We've gone through a fair bit of due diligence and rigor behind it. That UK social housing is a big sector. Even Lee Ka-shing, through Chong Kong, has put in a couple of billion pounds into that sector. So in this particular fund, what is made available is basically the fund manager buying new assets, converting it through A&A, and making it in terms of, from a carbon footprint perspective, a lower carbon footprint. So that checks the mark over the environmental side of things. And it's being made available through the poor in the UK. And this is through a term lease signed with the UK Housing Association, which then subsidizes this housing to the poor. So it checks the social box also. And through the rigor of our assessment and our framework, we decided that this meets the overall compliance of ESG.
Okay, so we're coming back to that ESG word again. So looking at your website, I see this coming up again. It's very central to your investment thesis now. Is this part of sort of catching on to the trend, making sure that that you're aligned with the current buzz, or do you see this making ESG compliant investments a way to better guarantee returns for investors?
Well, I can talk a fair bit about this, and just to keep the story short, back in 2018, I had a client when I was working with JP Morgan coming to me and say, I want to monetize my effort to go green. And when I looked at it, back in 2018, there wasn't much out there for you to monetize. And I came from a capital markets, global markets world, where you're looking at selling options, you're looking at selling assets that's available in the marketplace. So when I looked at it back last year, and I looked at the amount of noise that we've been reading in FT and Business Times, there's just a lot of greenwashing. And looking at what's going on this planet, we felt that it's extremely important that we start being a platform, setting the gold standard in terms of what ESG means. And that's where, if you start looking at the amount to finance the transition to a net zero future, you're looking in Asia alone is about 11 trillion. Southeast Asia alone is about 11 trillion US dollars. Globally, you're talking about numbers closer to 50 trillion US dollars. It's so much money required to transition us from our petrol burning cars to electric cars and renewable energy. It's a fair bit that we need to do. It's not something that is just flavor of the month or flavor of the year. And I have a team of specialists within the firm that have set up a framework to allow this to happen.
All right, well, thanks very much for that, Raymond. I noticed also, I think it's on your website, that you've got a project coming up in Taiwan that you've just recently launched. So I don't see that many Taiwan projects, so maybe you could tell me more about why you chose this one.
The Taiwan project is very interesting. It's a significant project. I'm not able to share very much about it unless you sign up on our platform. It's a later stage development project, and they are basically raising mass financing due to the inflation cost that has just increased over the last 1 year, and increasing the development cost. So when we looked at the risk profile of this asset, the underlying asset value and the amount that they are raising for the mass and what is going to be expected of these assets, it just provides very good risk-adjusted return.
All right, so it's a situation where it seems a bit on the opportunistic side, isn't it? This is kind of, can I term this an opportunistic investment?
Yes, it is. It's definitely an opportunistic. They've raised all their senior funding, and this mass funding just came about just very recently.
All right. In terms of going back to ESG again, in terms of evaluating, when you look at a project and you look at whether this is the right project for your investors to go on your platform, what types of elements of the project in terms of ESG does SDAX typically look at?
Right. Like I mentioned earlier, we put together an ESG framework, and you were talking about alphabet soups. When I started this journey with my CSO, Bilay, she was rattling off all the alphabets of all the different taxonomies across the globe. And what we realized is that there's so many different standards out there. And what she has done together with the team is pull together all the different taxonomy to a single standard. So whatever that comes on our platform and passes our platform, we know that it will pass any of the taxonomy and standards that is available throughout the globe. And when we look at the ESG assets, we look at it from three tenets. One is intentionality. It definitely must have impact to the world. That is the key component that we're looking at. Second tenet would be returns. Any investors put money in, of course, there are family offices that's looking at philanthropy to put money in for transition to the new future, right? But returns has to be factored in where it generates sufficient return for investors to put their money in. So that's the second tenet. The third tenet, which is extremely important, is the ability to continue to measure the performance of the ESG asset. Is the fund manager or the promoter of that specific asset meeting all the KPIs required per the contract provided to the investors, right? So that's extremely important in the overall scheme of ESG.
Right now, are you expecting that, given the amount of policy that's changing around, particularly around sustainability, are these investments likely to then provide better returns for investors than more traditional types of opportunities?
It should. And I would say a lot of corporates think and a lot of asset owners think from the perspective, if I'm going green, I'm expecting a discount in terms of my funding rate, in terms of my returns. I would say it's the reverse. And to your earlier panel member mentioning, carbon tax is coming. It's coming quite rapidly, from $5 to $25 to $50. That's in Singapore alone. Europe, we are talking about €100 per metric ton. And in Singapore, if you hit over 25,000 metric ton of carbon dioxide emission, you'll be taxed at this point in time. So if you start looking at the cost of doing business, your cost of funding plus tax that comes on top of it, that is your real cost of doing business. And unless you go green to avoid this carbon taxes, you're expecting to pay more, right? And in speaking to one of our investors, PSA, a Temasek company, they are the port operator and the supply chain integrator in the globe. When we start looking at their Scope 1, 2, and 3, and if you're familiar with ESG, Scope 3 is everything that you cannot control. It's your partners that is providing services to you. And but this still is part of their tax, their carbon tax that they have to pay. And the only way that you can reduce it is you pick partners and providers that are green. So it's extremely important to start reducing this cost of carbon emission.
All right, I better go and check what our ESG rating there is at Mingtiandi. Anyway, I'm looking at the clock. We don't have too much time left, and I wanted to really get a sense of the roadmap that you have for SDAX. You've been in the saddle for more than a year now. It's a very fast-growing thing. So what should we expect, say, in the next year from SDAX?
Well, I'll say that in the next year, we are looking at a lot of collaboration with different partners, with fund managers across the audience today. We're looking at how do we, in working with a lot of these partners in terms of collaborating, automating a lot of the processes, basically reducing the cost in terms of bringing these assets that were not readily available to the broader base of investors. That is a key area. We're looking at collaborating with some of the other partners in terms of the rails, which we will be announcing in upcoming press release, where we are looking at collaborating with other exchanges, bringing other assets also available to the broader base of investors, not just in Asia, but across the globe. The second area that the focus is definitely building up the investor base, and this is through the private banks, through the intermediaries, making these assets available. Like I said, the amount of funding, the amount of revenue that is available to fund managers, to the broader promoters is still massive. So there's a new pot that's available, and making that that pot available to the managers and getting the investors to start putting the money to better productive use instead of just leaving it in the bank generating 20 basis points of return, right? Not really, you don't really call that return. So those are two key areas that we are focusing on. And on top of that, improving our overall experience across the board with the smart contracts and increasing transparency and ensuring that there's trust in the overall system.
All right. Well, I do think that is about all we have time for today, and I do not want to come between my hungry crowd and their coffee break. Yes. Raymond, it's been great having you here.
Thanks, Michael, for having me. Thank you.
All right. Thanks to all of you.